In the absence of bad news, we rally. Many of you may have remembered yesterday we got hit with a lot of headlines and a lot of noise. But if you watched yesterday's video, we dissected each thing that came up and that was relevant for the oil and energy markets. And we had no fear. Today, in the absence of any new headlines, we're rising again. Now, we're not back above the 80 level, but there's a number of things that I think we can take and project out that should bring us back to the $80 level and back on a strong trajectory. For those of you who've been in this investment for quite some time, you may remember the August, end of July sell-off that was quite aggressive. And there was a lot of people who were calling peak oil, and it was a very painful period. However, that period then saw a massive rally in the price per barrel of oil up to 7-year highs. It's a very good thing to see. However, now we're at the lowest levels in 6 weeks. And should we be fearful? Well, if you're taking what Goldman Sachs is saying, I believe not. They're saying two things that I think are very important. One, that the effects of releasing from the Strategic Petroleum Reserve are already factored into the price per barrel of oil and into the market. Why would that be the case? Well, we've heard nothing but headlines about this, and we've already seen barrels enter the market. Everyone knows that that's a possibility, and it's certainly on the table. But when we look at the math, the United States has about 660 million barrels in the Strategic Petroleum Reserve. They don't want to push that much lower. That's not a whole lot. That's about 6 days total supply. If there were a serious issue, we want to have that reserve oil. We don't want to be missing oil in a worst case scenario. Now, we're not saying that's going to happen, but just for some perspective, the number isn't so high that they're going to flood the market and it's going to lead to a permanent decline. And Goldman Sachs makes another point, which is that the supply, if they are to drop the Strategic Petroleum Reserve, would actually cause prices to go up, because while it may have a short-term impact, all of a sudden people are a little bit more fearful. Buyers of oil are a little bit more fearful about the long-term prospects of oil, because as we've said, the most important thing is the fundamental supply deficit. There's a demand and there's a supply, and the supply is under the demand level. And there's a number of reasons for this. The rig counts are not as high as they were in 2019 levels, although oil consumption and demand has reached those levels, and there's no indication they're going to get back to where they were. In addition, OPEC has locked in their price or their production increases, so we can't be expecting a whole lot of new production from them either. So we have to expect this dynamic to last, and as this dynamic lasts, the price per barrel goes up. So sure, the White House can drop more reserves into the market, and that may have some short-term impact, but over the longer run, we still have that deficit, and less reserves is going to put additional anxiety into the market and cause fears. And this isn't a crazy oil price. This is $80 a barrel. This is not historically crazy. We had gotten up to $140 a barrel just about 10 years ago. And since then, we've seen significant inflation and significant underinvestment in oil and gas with a very low rig count. There's no telling how high this price per barrel of oil can get. I believe we're having some sort of lull similar to the end of July, August decline that is temporary and occurs based on fear and irrationality. And then over time, the market shakes out the weak hand, so to speak, and we get back to the fundamentals of the market. So that is one force that I think is certainly the case. The other one that Goldman Sachs cites is the administration's policies. Now, we've talked about the supply-demand dynamic, but why isn't U.S. supply just coming back on? Well, there's a coming green wave. Nobody's doubting that we're transitioning to a green world, and that would actually be a good thing for the world. It would basically be crack for the economy, as energy is basically renewable, and energy is obviously a huge cost. However, with that green wave, what energy company wants to invest in new oil production if that production is going to be rendered useless in just a matter of years? Obviously, we think that matter of years is quite some time. The IEA says at least 2050, oil is going to remain the top energy source. However, the rhetoric and the investment dollars is not saying the same thing. So that is another aspect that's leaving the market in a deficit. Again, I reiterate, I think that the forces at play are much more important than any sort of short-term headlines, risks, fears, and we're here to play the longer game. This is a multi-month, potentially even multi-year play. If you look at actual oil prices over the last decade, they've kind of been in this range. Looks like we're kind of hitting some sort of top resistance. If we can break through that and all the forces, the fundamental forces indicate that we're going to, we could get to very high prices in the barrel of oil. And whether you like it or not, we're not here to make that judgment. We're here to make the judgments on what things can and should do and make money on that. That's what we do here. This is a money-making channel. And I believe energy is remaining a good place to put your money and invest. And it's been underinvested. There's been a lot of hedge fund activity in it recently. People are waking up to the actual investment potential here. For example, ExxonMobil did $6.7 billion last year in last quarter in net income at $60 to $70 a barrel. Now we're in 70 to 80 and possibly higher than that because we've been higher than 80. They're probably going to put somewhere around $8 and change billion in net income. Annualized, that is about a 10 PE with a 5% dividend and investments for green renewable energy. So you're getting a fantastic business at a fantastic price. If the price per barrel continues to climb above that, which we believe it will, then the stock should do even better. And that's what we're really playing for. So I'm kind of adding to my positions here on this odd, chaotic selling that we don't think is long-term. We don't think the peak oil has occurred. We think everything that's happening is all headlines. This FTC investigation, price gouging essentially, the rhetoric around strategic petroleum reserves, it's not happening. They've asked China to do it, it's not happening. White House has gone to OPEC to increase production. That's caused fears in the past, it's not happening. So we've been through a lot, but it seems to be just headlines and rhetoric to make the administration look like it's actually doing something. However, it's their policies which has caused this issue and likely will continue to cause it into the future. They've already tried to backtrack things like drilling on federal lands, but these wells are going to take a very long time to make. And what's really the incentive here? Well, it's a little bit more production, but with a hostile administration who had just previously said they didn't want drilling on federal lands and a coming green wave, is that really something companies are going to pursue, not only bidding on that land, but then investing in all of that equipment? We see rig counts aren't going up. There's plenty of land domestically. They could be drilling, but they don't want to do that. They don't really want to invest in new production, at least not right now. They'd rather give that cash to shareholders, and as shareholders, we're happy to receive it. So that's today's video. We're covering energy, oil, and gas. It's our favorite sector. We still continue to like it, and we think the short term is just headlines and noise. So we'll see you on the other side. Until tomorrow, peace out.